What if I told you a global sportswear giant just lost billions in market value in a single day? This is Kenya News Update today. Coming up, you'll discover why Adidas shares are crashing, how US tariffs are hitting European companies, and what this means for your favorite sneakers. Meet Adidas, a global icon, the brand behind the Gazelle and the Superstar. On Wednesday, their world shook. Shares plunged 8%, a fresh 52-week low. But here's the twist. This isn't just about one bad day. This is a 43% collapse over the past year, and the reason will shock you. The company just gave its outlook for 2026, and investors hated it. The stock fell off a cliff. But why? What did Adidas say that was so terrifying? The answer is in the numbers, and it involves a direct hit from the Trump administration's trade policies. Adidas expects 2026 revenue to grow in the high single digits from 2025's total of 24.8 billion euros. That's about 28.86 billion US dollars. But here's the part that will blow your mind. Their operating profit target is only around 2.3 billion euros. Analysts were expecting much more. This guidance was 15% below overall expectations. The implied profit margin is just 9%. Well shy of what the market wanted. But the real story is the double whammy. Adidas is grappling with two massive problems: unfavorable currency swings and a 400 million euro negative impact from US tariffs. That's right, 400 million euros, gone, because of tariffs imposed by the current US government. This is the Trump administration's trade policy, hitting a European champion right in the balance sheet. And then, something shocking happened. Even their recent results missed the mark. Fourth quarter sales were 6.1 billion euros. Profit was 164 million, both slightly below estimates. Yet listen to what CEO Bjorn Gulden said. He called it a very good year-end, driving double-digit growth and more than doubling operating profit in the quarter. The contrast is staggering. The CEO sees triumph, the stock market sees disaster. So who's right? Here's what nobody's talking about: the midterm targets. Adidas says from 2026 to 2028, sales will grow at a high single-digit rate. Operating profit will expand by a mid-teens annual growth rate. That sounds strong, but investors are screaming sell. The question is simple: how conservative is this guidance? Or is this the new reality for global brands under pressure from US trade policy? The implications are huge. This isn't just an Adidas problem. This is a signal to every European company doing business in America. The Trump administration's tariffs are now a direct line item on their profit forecasts. A 400 million euro hit. That money could have been innovation, new products, marketing, jobs. Instead, it's a cost of doing business in a new era of trade. The controversy is clear. Some say this is prudent planning. Others say it's a giant red flag for the entire sportswear industry. But here's the unanswered question. If a powerhouse like Adidas, with all its history and brand power, is taking this big of a hit, what does that mean for the smaller players? What does it mean for the prices you pay for sneakers in Nairobi or Mombasa? The stock is down. The guidance is disappointing. The tariffs are biting. Do you think global companies can adapt to this new trade reality, or are we seeing the start of a major shift? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking business news from around the world.